Picture this. It's 1998. The internet is absolutely exploding. There are new dot-com companies popping up left and right, and investors, they are throwing money at them, completely convinced they struck digital gold. The optimism was just off the charts. It really felt like a whole new world was dawning.
And you know what? For a little while, they were right. Stock prices shot to the moon. But then, 2000 hit, and the whole thing just imploded. It was a total disaster. The NASDAQ tanked, falling almost 80%, and get this, only about half of those dot-com darlings even survived. The real kicker? The internet was the future, but the hype got so far ahead of the reality that it created one of the biggest financial bubbles in history. So why the history lesson? Because that same electric energy, that same feeling, it's happening right now. And it's all centered around one thing, AI. And it brings us to this legendary quote from investor John Templeton. Is this AI boom just the same movie with a different cast? Or is this time truly different? Let's dig in.
Okay, let's fast forward to today. The fate of the entire stock market pretty much rests on the shoulders of just 7 companies. You've heard of them: Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and nvidia. They call them the Magnificent Seven, and right now they're locked in an all-out arms race to dominate AI. Let's really look at the insane scale of what's happening.
What's truly mind-boggling is just how big these companies are. I mean, together, these 7 giants make up a massive 36% of the S&P 500. Think about that. It means if you own a simple index fund, like in your 401k, you are already a major investor in this AI race, whether you realize it or not.
So just how much are they spending on this? Let's start counting. First up, Meta is pumping $60 billion a year into data centers and their big vision for the metaverse. That is a colossal bet on how we're all going to interact in the future.
Next, you've got Alphabet, Google's parent company. They're investing $75 billion every single year. And their goal? Nothing short of completely rebuilding the internet from the ground up, with AI at its absolute core.
And Microsoft, they're raising the stakes even higher, with $80 billion a year. That money is funding their huge partnership with OpenAI and building these monstrous supercomputers that are needed to actually power this whole AI revolution. So what's Amazon's play in all this? Well, they're spending a jaw-dropping $100 billion a year on AWS, their cloud computing arm. See, they're not just trying to compete. They're trying to own the very plumbing that the entire AI world is being built on.
Okay, now, add in what Apple and Tesla are spending, and you get a number that's just staggering: $330 billion in 1 year. To put that in perspective, that's more than the entire economic output of Finland. This spending isn't just about cool tech, it's a massive force that's driving our whole economy.
But wait a second, this brings up a really important question. Where's all this cash actually coming from? And this leads us to our first potential red flag. This weird, almost circular flow of money that some people are starting to call the AI money machine.
Let me break down how this works. It starts with a company like Microsoft investing billions into a hot AI startup, let's say OpenAI. Then OpenAI turns around and pays a huge chunk of that money right back to Microsoft to use their cloud services. Microsoft then takes that revenue and uses it to buy the essential AI chips from nvidia. And then, to complete the loop, nvidia takes some of its massive profits and invest it right back into OpenAI. You see the cycle? Everyone gets to book more revenue, and their stock prices go up.
Here's a really simple way to think about it. Imagine I pay you $1,000 to dig a hole in my backyard. Then you turn around and pay me $1,000 to fill that same hole back in. We haven't actually created anything of value, but on paper, we've both generated $1,000 in revenue. It's a bit of a silly example, but it shows how this cycle can create the illusion of incredible growth.
And the single biggest winner in this whole thing? Oh, it's nvidia, by a mile. They're selling the picks and shovels in this AI gold rush. As a result, their stock price has just exploded, up 1,600% since ChatGPT came out. They're selling chips to literally everyone and then investing in the very companies that are buying their products. So what's the core problem here? Well, the valuations are absolutely massive, but the actual profits, they're missing. Take OpenAI. It's valued at $500 billion, but reports say it's actually losing money every single month. The big hope is that the profits will show up eventually, but right now, they just aren't there.
And this brings us to our third major warning sign. See, all of this investment, all this hype, it's all built on one giant assumption: that AI's progress is going to keep up this unbelievable breakneck speed. But we might be about to hit a very real wall. For years now, AI has been getting smarter by basically eating everything it can find online. Books, articles, websites, you name it. But it's starting to run out of food. In fact, by 2027, it's projected that AI models will have consumed pretty much all of the human-generated content on the entire internet. This is what people are calling the data wall.
So why is that such a big deal? Well, AI learns from data that already exists. But we humans, we learn from new experiences, by interacting with the world, making mistakes, having a real conversation. AI can't just go out and have new experiences to create new data. And if that progress stalls because it's run out of things to learn from, those sky-high expectations for AI could come crashing right back down to earth.
Okay, so I know we've just gone through some pretty serious warning signs, but this isn't about panicking. This is about being prepared. So let's shift gears from the risks and talk about a clear strategy for how you can navigate all this uncertainty.
First things first, is this just another dot-com bubble? Well, not exactly. The AI leaders today are huge, established companies with real products and a much clearer path to making money than those fly-by-night startups from the 90s. The warning signs are definitely there, for sure, but the foundation these companies are built on is a whole lot stronger this time. So what's the playbook? What should you actually do? It's a simple three-part strategy. First, just keep investing. Set up those automatic monthly investments into a broad, low-cost index fund and do not panic sell when the market gets rocky. Second, focus on boosting your income. Getting a promotion or starting a side hustle, that's the fuel for your investments. And third, diversify your assets. Spread your money around in stocks, bonds, real estate, even a little crypto to protect yourself when things get volatile.
Look, a bubble bursting isn't always the end of the world. For people who are prepared, it's actually an incredible opportunity. So the final question is this. If a crash does come, it's going to create a historic opportunity to build wealth. The real question is, will you be ready to seize it?